Optimism seems to be continuing to be the word of the day, the word of the week, the word of the year, even as people are a little bit anxious about what the Trump administration is doing. The optimism seems to be key. We'll talk about that more near the end of this particular morning's broadcast. But the markets are definitely looking optimistic. The every evidence would say that the markets are going to be hitting all-time highs, maybe this week, maybe next week. We're only a couple percentages away from the S&P getting back to 6154 or whatever. I forget the exact number, but that seems to be where things are going. And of course, the optimism in the general equities is propelling Tesla this morning, but Tesla is outrunning it a little bit in terms of the beta. And I would, of course, suggest that could be some of the FOMO that we're expecting between now and a week from Thursday. Now, keep in mind, Larry Goldberg told us yesterday, and he does have some inside information. Larry Goldberg says, look, the 12th is not like in stone, so this could be moved back. But right now, we're all looking at the 12th as the date, which is shockingly only 9 days away. Well, we've got weird, spotty numbers in terms of Tesla sales right now, with Norway and Australia seeing huge numbers in May, but other European numbers were off in May, and I couldn't find the China numbers anywhere. Not sure whether there's another one of those weeks when you don't get the China numbers, but definitely looked every place that I normally look for those China numbers, and they weren't out there. Speaking of China, Mario Nawfal has this morning. He says Tesla enters China's official EV list for small towns. For the first time ever, Tesla's Model 3 and Model Y are now included in China's state-supported campaign to push EVs into the countryside. That means cheaper Teslas could be rolling through rice fields and small towns real soon. They have not ever been invited to this annual list before, but now that they're in, that could help them with their sales, of course, in China. Sawyer Merritt has this. Piper Sandler analyst Alex Potter has a new Tesla note. Tesla is the only car company that is trying to source batteries at scale without relying on China. Eventually, Tesla will be making its own cathode active materials, refining its own lithium, building its own anodes, coating its own electrodes, assembling its own cells, and then selling those in its own cars. No other U.S. company can make similar claims. Of course, he could have gone on to say, and maybe he did because this is just an excerpt, he could have gone on to say that Tesla has already been doing this with Panasonic and has massive plans to expand with other companies in the U.S. as well. Elon Musk points out this morning, he says, with regard to that Potter quote just now, he says, it is important, albeit extremely hard work, to localize supply chains in order to mitigate geopolitical risk. And what we've seen Tesla be doing since the beginning of time, since the beginning of their company starting out, and what he has now apparently whispered in the ear of the President of the United States is we need to localize these supply chains in order to mitigate geopolitical risk, which you heard me say. I believe it would be well over 12 months ago as the president was campaigning and other people were saying, Randy, we don't understand the strategic aspect of what you're talking about, but that's what I was talking about. Strategic materials need to be resourced here from the mine, refine, produce, all needs to be done in the United States if we, because you never can tell when somebody might start a war. Nick Cruz Patain, he says, Dan Ives on Tesla's ability to scale robotaxis versus Waymo. Quote, when you look at Waymo, they're essentially in 4 cities. The cars cost $230,000 each. The question is, can it scale? First of all, Dan, you gotta, if you're going to have credibility, you really do have to keep up to date. The Waymo cars don't cost anywhere close to $230,000. My guess would be, I mean, not even in the ballpark of $230,000. My best guess right now would be maybe 65, maybe $70,000 after all of the equipment is put on, all of the upgrades are made. I'm going to say 65, maybe 7. Anyway, he says their view, according to Dan Ives, is that when it comes to scale, Tesla is unmatched relative to engineering talent and its ability to scale. Well, there you go. I agree with Dan on that part, but man, he's way off on that other number. CNBC has this morning. I thought this was really interesting. Louis Leff, City of Austin Assistant Director, said that more cities are reaching out to Austin to ask them, how do you handle these situations? Meaning, putting out autonomous ride-hail services. Cities that have inquired include New Orleans and Nashville, as well as some outside the United States. We were in Japan launching our service with Rakuten earlier this year, and the Minister of Economics, and the questions they were asking are, what are the regulations in Texas like? Several AV companies in Austin have safety protocols and proactively work with local first responders. Zoox, for example, has held trainings with first responders and met with city officials, a spokesperson said, but there is technically no requirement for AV companies to engage with emergency service, according to Austin officials. Companies hoping to succeed in Texas often begin their conversations with the state by focusing on safety first, according to Austin Leff. They note their technology can recognize a fire vehicle or a hand signal, so there's a lot of focus on things like that. Austin's transportation department has been collecting information about incidents that pose a risk to public safety, and then they relay that data to the appropriate operators. It places, quote, all reports we receive about AV incidents into our dashboard, about half of which over time have come from our city department colleagues, city officials said. Waymo, which has been one of the most visible leaders in the robotaxi market, has said it has made safety a priority. No kidding. 𝐬𝐚𝐽𝐻 and co-CEO Dmitry Dolgov told employees at a November all-hands meeting that they should all scale up as aggressively as possible, but do so with safety at the forefront of their efforts. People familiar with those conversations said. Waymo tracks incidents that involved its vehicles, but doesn't share city-level data publicly. With Texas regulation around AVs relatively lax, some AV makers worry about the impact a collision by one of the players in the state could mean for the entire industry. It takes a long time to earn trust, and it doesn't take that long to lose it. There can always be an overreaction by regulators, 𝐬𝐻 said. It's their job to protect the public. Already, the AV industry suffered a number of black eyes. General Motors shut down its Cruise robotaxi service in December after one of its vehicles dragged a woman to 20 feet on the street. We all remember that. Despite such incidents, University of Texas Stone, which has been doing a lot of work in this area, said he thinks that cities are being overly cautious. 100% true. The standard that people are aiming for is perfection, and the standard they should be aiming for is better than people. Better drivers than people, he said. A fatal car accident rarely makes the local news, but if an autonomous car has a fatal accident, it's a big deal. But if autonomous cars can reduce the number, he says, it should be seen as a huge societal win. And I agree with him. I know Elon agrees with him. And this is the key. What are the numbers compared to human drivers? Obviously, the news is looking for that clickbait. They're looking to make something big, a big deal. They want the headline to sell papers, to sell ads on internet. This is Randy Kirk. Please hit like, subscribe, notify, join Patreon. All those things would be just great. Later today, we will have Nicholas Gibbs, as always, and then Brian White. New orders for manufactured goods in April were down, sadly, following 4 consecutive monthly increases. They decreased by 22.8 billion, or 3.7%. The U.S. Census Bureau reported today. This followed a 3.4% March increase. So you might be looking again at one of these situations where if you take the 2 months together, you're basically flat. Shipments are down 2 consecutive months. They decreased 1.8 billion. This follows a 0.2% March decrease. Unfilled orders up 11 of the last 12 months, increased again. So what's going on with unfilled orders? What's wrong with these people? They can't get the stuff out the door? Anyway, Bloomberg's reporting this morning that job openings, the JOLTS numbers, unexpectedly rose in April in a fairly broad advance. Hiring picked up, indicating demand for workers remains healthy. Available positions increased to 7.39 million from 7.2 million in March. The median estimate for the Bloombergs were only expecting 7.1. They thinking it was going to go down. The advance in openings was driven by private sector industries. Listen to me now, please listen to me. The advance in openings was driven by private sector industries such as professional and business services, healthcare, social assistance. Meanwhile, openings in manufacturing and leisure and hospitality fell, as did openings in state and local education, leading to a decline in overall government openings. Vacancies in federal government, however, rose. So there is some people hiring in the federal government. But this is what we talked about before, the idea that as we reduce federal government, what happens? The private sector has a need for these people. They pick them up. The data can be very choppy, swinging sometimes by as much as 500,000 vacancies in either direction from month to month. Economists see value in looking at the report from an overall trend, which shows openings have mostly stabilized between 7 and 8 million for the past year. Given how much the JOLT series gyrate up and down from month to month, the only way that I get excited, according to this, who is this? This is Stephen Stanley. He says, the only way I get excited if there are big moves in the same direction for 2 months in a row and or the levels are breaking new ground. He's the chief economist at Santander, U.S. Capital Markets. None of the key indicators, job openings, quits, and layoffs, ticked either of those boxes in April. No, I would call it a fairly flat report. The rise in job openings, along with steady hiring and low unemployment, support the Federal Reserve's assertion that the job market's in good shape. However, it's taking longer for those who are out of a job to find work, and economists expect the labor market to weaken more notably in coming months under the weight of President Trump's tariffs. Not this economist. Okay, no, I'm not an economist. I took one class in economics, I think, in university, but I study it every day. I've studied it every day now for 3 years or 2.5 years to produce this program. And I'm telling you right now, I don't think we're going to be seeing lower job. I think we're going to see increasing job opportunities, maybe substantially before the end of the year. So far, this hasn't shown up in the data yet. Policymakers and forecasters will be attuned to any softening. What Bloomberg economists say, headline job openings surprise to the upside, but details of April's JOLT report show somewhat more labor market weakness. Vacancies declined in discretionary services, most associated with travel and, of course, in manufacturing. Layoffs increased and the quits rate dropped. Workers found it harder to get new jobs. So people are not quitting their jobs thinking, oh, I can get another one. They're waiting till they have the other one before they quit. Hiring advanced to the highest level in nearly a year, according to the JOLTS report. However, the number of layoffs climbed to the highest since October, and fewer people were voluntarily quitting. The number of vacancies per unemployed worker, a ratio Fed officials watch closely as a proxy of the balance between labor demand and supply, held at 1.0, in line with pre-pandemic levels. At its peak, the ratio was 2 to 1. You may remember that. We talked about that a couple of years ago. Okay, this is from Charlie Bilello, Charlie Bilello, if you want to follow him. The U.S. bond market has now been drawing down for 58 months, by far the longest in history. So one would think it's about time for that to reverse. We'll see what happens. The Patriot Oasis this morning says, breaking, U.S. collected a record-breaking $22.3 billion in tariffs in May. There you go. It was running around $8 billion, last month $16 billion, and now this month $22.3 billion, getting into the range of the $300 billion that I think the the Treasury Department, Bessent, he would like to see it, or I think he'd like to see it around $300 billion a year. I think that probably Trump would like to see that too. Rod D. Martin says this morning, he's with Rasmussen. So here's some very interesting, very optimistic numbers. Listen up here. Trump's personal numbers strong, and multiple polls confirm everything right now is positive. Right now, Trump is continuing with a 52% approval, but Rasmussen's not the only one to say so. Insider Advantage gives a 55% approval. Democracy Institute has a 52% to 46% negative. 51% say Trump is fixing America. Just 37% disagree. And then we've got 51% now. The right track has now crossed 50% to be 51% now say the country is on the right track. That is a number I think everybody should be paying a lot of attention to. In November 2024, November of 2024, just 6 months ago, only 26% said right track, 63% said wrong track. We've now got a complete reversal of that with a 37-point swing in just 4 months. I think this is something that everybody should be paying a lot of attention to because it's impacting everything. And as people get more confidence, they're going to start buying. I talked about it last night with Larry. I think the first thing we're going to see is durable goods orders picking up. Maybe even by next month, by August, maybe as people start getting ready to go back to school, start feeling a little more clear about tariffs and whatnot, I think you'll start seeing durable goods go up first. As durable goods go up, manufacturing goes up. As manufacturing goes up, transportation goes up. As all of those go up, you've got more money. People have more money in their pocket. They're feeling better about the economy. All that will lift, if you will, all boats at that point. Okay, so let's go ahead and look at the numbers this morning. We have got the Tesla is currently up 2.94%. It was up over 3% a minute ago, but it's come down just a little bit. All the markets are topping off a little bit now after being strongly up all morning. So Tesla's sitting at 352.78. The Dow Jones is up 0.53, NASDAQ is up 1.03, and S&P is up 0.64 at 5,974. Very, very close to the all-time high, getting there, and it should happen soon. Now, the Magnificent Seven is mixed this morning with Google down a bit, Meta down a bit, everything else is up, and the Cathie Woods are all up strongly again this morning. Remember, several people have been talking about the idea that this might be the year for this be the time when the markets would broaden out and the Cathie Woods and the Russell 2000, et cetera, would get some advantage from that. All right, let's go ahead and take a look at bonds. We have got bonds. Here we go. Bonds up 1 full basis point to 44.72, 4.472. I'm sorry, said that wrong. We've got oil up a little bit this morning, 1.16%. I'm getting a little fuzzy here. Let me think more clearly. My brain was going off to something else there for a minute. Oil is at $63.70 this morning. It's getting a little bit high for my taste, up $1.17. We've got natural gas up 1.6% to $3.75. A couple of days ago, it feels like just a few days ago, we thought it was looking like it might go under 3. Now it's looking like it might go over 4. That's quite a shift. Gold, which was looking huge yesterday, has definitely taken some profits, down $19.60 this morning at 33.51. Silver also taking profits, down 0.04% at 34.68, but that's still a really strong number for silver. And copper down 0.19% at $4.85. Again, very close to $5. So those are interesting stats at this point. We got the dollar rebounding from a 6-week low. And according to the headline, we have got Bitcoin up 1572, reversing its recent sell-off, sitting at about 106,000. And there you go. Those are the numbers as of now. Yeah, last night we had, I think what you want to look at from last night was the Brian White, the Larry Goldberg discussion we had was outstanding. I'll put that card up also, but the Brian White discussion we had was about catalysts. I think you'll really like that when we point out that there's 3 or 4 or 5, 6, 7, 8 catalysts coming, but there's one of them that Brian White and I agreed on was the biggest catalyst that everybody should be paying attention to. I'll put both of those cards up right there for you to go back and check those out. Brian White will be on again tonight. Outstanding fun show coming up for you tonight. And then Nicholas Gibbs at probably early tonight, probably 4:15, 4:30, something like that. Okay, and then probably almost no, well, There'll probably be something tomorrow, but I'll be traveling tomorrow and then back, unfortunately, back in, my lovely hometown of Riverside, California at Thursday. Okay, so just taking Tesla one more time. We've got Tesla continuing to just be a little bit of profit taking, $352.54. Okay, that's all I got for you right now. Better get out of here and get this posted. It's been great talking to you.